It gives me great pleasure to bring on board Dr. Ashutosh Raghuvanshi, Managing Director and CEO with Fortis Healthcare. Dr. Raghuvanshi, good morning. Thank you for joining us. Let's talk about what is happening to the hospitals right now in terms of the COVID crisis. One side, we can get into the availability, we can get into where the medical care and availability of medical infrastructure. We've discussed that with you in the past. But today, I want to understand that for a shareholder, somebody who wants to understand and analyze this COVID crisis as something, how it has affected business and the return ratios for a hospital like yours.
So, a pandemic of this nature has impacted the routine work, the elective surgeries in a big way. So the impact started sometime in the month of February, and so for the last quarter we had impact, and this current quarter also we see an impact. Primarily, the volumes got reduced to the emergency work only to start with, but then gradually there is a resumption of activity on the side of chronic illnesses, things like cancer treatments, etc. So we also believe that though this is a short-term blip, but there are going to be kind of sustained demand and pent-up demand of elective work, especially for chronic ailments, and that is going to last for at least 6 months to a year following the resumption of normal activity. But it is anybody's guess as to how long it is going to take to for things to normalize. So it is definitely going to have an impact on the financials this year, but the fundamentals of this industry are strong, and that is what we are going to build on.
Fair point. Now, can you walk us through that there are some hotspots, cities like Mumbai, Delhi, where we understand that the COVID crisis has not got contained, but a lot of other cities have hit a normal point, thankfully for that. What is happening to your business operations and hospitals which are outside Delhi and Bombay?
Yes. So in many other cities also, we are seeing still upward swing in the number of cases, like for example, in Calcutta as well as in Chennai. However, in Bangalore, we see a kind of almost normalization of the epidemic. At the same time, in Delhi and Mumbai, as you said, that there are logistic challenges because of these red zones and the restrictions which come as a consequence of that. So that also impacts us in another way, where our costs go up because we have to host the staff and make sure that they have a safe accommodation available, and the number of shifts we have to run is also higher. So that way it is a stress on the system, but I think a lot of those things have been streamlined now with the learnings of the early period of this lockdown.
Could you give us a sense of what has happened to your revenue or the post in the unlock 1.0 environment? How much are you still below your normal averages? And by the end of next quarter, when I say end of next quarter, by end of financial year, will you come back to your normal levels in terms of footfall, revenue, and other procedural operations, stroke surgeries?
Yeah, so I will just give you a kind of an indication in terms of our occupancy level, and that will indicate as to how the business is recovering. So in the first month, April, the occupancy levels were about 25%, which went up to about 35% in May. And as we speak in this month, the average occupancy is trending about 45% plus. It is about 48% at the moment. So I think that is the level of recovery which is happening. So I don't expect the normalization to happen in the second quarter. It would probably go on till the end of second quarter. So if we achieve the 50% occupancy now, as it looks like, then we are likely to go to about 60% the following month and to a near normal by the end of next quarter.
Right. Mr. Raghuvanshi also wanted to, talk about what really is going on with earnings. That's what we're here to talk about. We understand that the impact of COVID has been, hit on your financials. But do you really see this continued impact coming in? As you're saying that critical surgeries, etc., and critical care is now coming back to hospitals, and this can be said about the entire healthcare space, not just Apollo, not just. Fortis, but just wanted to understand that apart from COVID related activities, how soon do you really see business coming back to normal?
Yeah. So, as you would have seen in our results, that, we had a fairly good year, a remarkable turnaround from our previous position. If we look at quarter to quarter, also, in spite of all the slowdown in the fourth quarter, we closed the year in a very satisfactory manner. However, this impact is, as I said, is going to likely to be there in the first as well as second quarter. So definitely this year earnings will be slightly depressed, but I expect that by third and fourth quarter, we should be towards normal levels of both revenue as well as profitability.
Also, Dr. Raghuvanshi wanted to understand, when there was that management change that happened at Fortis, a lot of changes were in the works with regards to better ratios, etc. I'm guessing during the lockdown and now with the COVID pandemic at its peak, everything would have taken a backseat. But what's the message to shareholders as to what's on the pipeline when it comes to the business aspect of running Fortis Healthcare?
Yeah. No, actually, this has given us an opportunity to sort of recommit ourselves to some of those initiatives which we had taken, and also sort of sharpen the cost focus which was needed in the organization. Other than that, I think there are many other measures which we took in the beginning of the last year in terms of reorganizing our internal organizational structure, operational team structures, etc. And that led to a kind of a significant saving. At the same time, we were able to upgrade our infrastructure. So last year was a year of rebuild, of sort of kind of restating our intention. So we spent about 280 crores on infrastructure capex. Some of it was replacement, some of it was additional clinical services, etc. So we are today in a position to be able to, get results out of all those initiatives we did last year. But some of the initiatives on the cost side and the structure side are ongoing, and will have to sort of keep on doing them. The lockdown was not an hindrance in any way. It was actually an opportunity for us to sort of focus a little more on those elements. And I think that is the reason why we have been, in spite of such a dramatic fall in revenues, we've been able to be pretty comfortable in our cash flows, and we are very comfortable to sustain even if the next quarter is low. So as far as your question is that when do we expect it to come back to normal, I expect that by second quarter we should start seeing an upwards trend, and by third quarter we should go somewhere towards normalcy. The absolute normalcy, of course, would depend on how the rest of the pandemic shapes up. But I think as far as the local market is concerned, we should be in a very comfortable position by the third quarter.
Every company, Dr. Raghuvanshi, is looking at cutting cost. Some are cutting expenditure, some are cutting advertising, some are cutting down on the vendor front. What would you be doing in order to minimize the impact of this disruption? Capex, renegotiations with your doctors and vendors, or simple shutting down of capacities which do not make sense?
A little bit of everything what you said. I think we had stated in our previous year also that we are going to continuously evaluate our portfolio to see which units either need to shape up, or if they are not performing well, then we have to find other ways to rationalize our portfolio. So that is definitely an exercise which has always been ongoing, and I think it always will be on top of our minds. But other than that, I think staff cost is also something which needs to be looked into. But our frontline staff, like the nurses and doctors, is something which we will probably want to support as much as we can. Some of the senior staff members, the contracts, as you said, those definitely need to be rationalized in order to be aligned where the company's interests and the physicians' interests are aligned. So those conversations are definitely going on. But some of the fixed nature, costs of fixed nature, like establishment costs and advertising and things like that, I think those definitely need to be rationalized. The healthcare industry cannot work like an FMCG. We have to prioritize our expense. So when it comes to capex, as you said, that is one area where we would not like to cut down at all. However, we are deferring some of the capexes which we had planned for this year in terms of upgradation of our clinical infrastructure, etc. But we are not we are only deferring them, and we are not going to cut any costs, because at the end of the day, our business is about providing high quality clinical services. So the focus of Fortis is exclusively on improving the clinical standards as much as possible, and keep on investing in that area and cutting down all the other unnecessary or less important parts of our cost.
Question, Dr. Raghuvanshi. I'll throw both the arguments at you. Someone who's bullish on the hospital sector would say healthcare insurance is growing. Indians are spending more in terms of clinical and other basic surgical care. And also the COVID crisis has been a basic eye-opener that we need to take care of our health. So that's the bullish argument. The bearish argument is that price caps are coming, local municipal interventions are coming, and given that COVID crisis has been a big eye-opener for everyone, prices now at hospitals, even for routine surgeries, will be cut and controlled. And on top of that, this entire medical tourism which you were supposed to benefit from will not happen because of no flying happening. Where does the real picture fit in? Because I've given you both the arguments.
Yeah, very interesting. I think the both bulls and bears need healthcare, and I think that's the bottom line. So what I would say is that both these arguments support why healthcare industry should be a focus now. It is, as any society sort of matures, health insurance becomes an important way of funding healthcare needs of people. So it is inevitable that happens. When that happens, automatically there is a control on price, which happens either through regulators or just because of the business dynamics which changes, and the insurance providers become a prominent force and a negotiator with the providers. So I think it is important for providers to understand that that is inevitable. Even if COVID pandemic did not happen, there was always a trend which was very clear that the focus has to be on cost. High quality care has to be provided, but cost has to be a big factor. So I think the healthcare industry, the provider side, will have to do a kind of a fundamental change, a paradigm shift, where they will have to focus on providing cost care at as low a price point as possible. So they will have to rationalize the way they build their infrastructures, how they engage with physicians, and how they engage with vendors. Those all things are going to become extremely important. And I think volume is going to compensate to a large extent to the low margin. So from a private healthcare earlier was thought to be a high margin and low revenue kind of business. From that, I think it should become a high revenue and a low margin business, which eventually will give a good business outcome to the shareholders who decide to invest in healthcare.